Let's dive right in. We're going to talk about the single biggest obstacle to your success as an investor. And spoiler alert, it's not the market, it's not a bad tip from a friend. Nope, it's that 3-pound chunk of gray matter sitting between your ears.
So to kick things off, here's a bit of a riddle for you. What do you think one of the greatest scientific minds in all of history, one of America's most legendary authors, and a whole group of economists so smart they literally won Nobel Prizes, what could they possibly have in common? I guarantee you, it's probably not what you're thinking.
That's right, every single one of them got absolutely wiped out by the market. And it wasn't because they weren't smart enough, not by a long shot. It's because when money's on the line, raw intelligence often gets completely steamrolled by human emotion.
And this isn't just some weird coincidence, It's a critical lesson in how our own psychology can totally overpower our intellect, even for certified geniuses.
This quote comes from a super painful experience. Sir Isaac Newton actually made a great profit on a stock called the South Seas Company, and he got out. Smart move. But then he had to watch his friends keep getting richer and richer. The fear of missing out, that FOMO, it got so intense that he jumped back in at the absolute peak of the bubble and lost a fortune.
And this story, it just plays out over and over again. You had long-term capital management, this hedge fund run by a literal Nobel Prize winners. Their math was perfect, sure, until their own greed and arrogance led them to take on so much risk that they almost brought down the entire global financial system. Then there's Mark Twain. He had a solid plan for his silver stocks, but after a few early wins, he started feeling invincible and held on, right up until he was totally broke. See, these aren't failures of intellect, they're failures of emotional discipline.
So why does this keep happening? Well, the answer is actually baked into our biology. Deep inside our skulls, there's a constant battle, a tug of war for control of our decisions.
So on one side, you've got what we can call the feeling brain. This is our ancient, primitive system. It's incredibly fast, totally automatic, and it reacts instantly to things that look like threats or rewards. On the other side is the thinking brain. This is our modern, logical, deliberate brain. Now, when everything's calm, the thinking brain is usually in charge. But when the market goes haywire and our money's at stake, that fast, emotional brain often just hijacks the whole operation.
And this internal conflict, it creates a whole series of predictable mental traps or cognitive biases that trip up pretty much every single investor. Let's break down the big three.
Okay, first up is loss aversion. On a neurological level, the pain of losing $100 is about twice as powerful as the pleasure you get from gaining $100. This wiring makes us hardwired to avoid losses in a way that can really work against us.
I mean, think about it. Have you ever held on to a stock that's just deep in the red, just hoping, praying it'll come back? Yep, that is loss aversion in action. The pain of actually admitting you made a mistake in selling is so great that your brain will convince you to just hold on, which often turns a small problem into a total disaster.
Next, we've got herding. We're social animals, right? We're literally wired to find safety in numbers. But in the market, that instinct translates to following the crowd, which is exactly how you get giant bubbles and terrifying crashes. When everyone else is buying, our ancient brain is just screaming at us to get in on the action. Be honest, have you ever bought a crypto coin or a meme stock just because of all the hype? Because everyone was talking about it? That's the herding instinct completely overriding your rational brain. It's the exact same force that dragged Sir Isaac Newton, a genius, back into a bubble he knew was crazy.
And finally, we get to maybe the most dangerous trap of all, overconfidence. A winning streak feels amazing. It floods your brain with dopamine, that reward chemical. But that rush can make you feel invincible, causing you to ignore warning signs and take bigger and bigger risks, just like the Nobel laureates at LTCM did. It's a bias that perfectly sets you up for an even bigger, more painful fall.
If you've ever had a few good trades in a row and started to think, you know what, I've figured this market thing out, you've felt this bias firsthand. Sometimes success itself can become the biggest threat to your future success.
Okay, so if we can't always trust our own brains, what are we supposed to do? The answer isn't about getting smarter. It's about becoming more self-aware and building a system to manage our own inner market.
The real edge in investing, the secret sauce, it isn't some complex algorithm. It's emotional intelligence. It's the ability to understand and manage these biases that are hardwired into your own mind. And the good news is, this is a skill. And just like any skill, you can get better at it.
So here are 4 practical steps you can take. First, self-awareness. Just think of it as a little checklist for your emotions. Before you hit buy or sell, just ask yourself, am I feeling greedy right now? Am I feeling scared?
Overconfident? Second, keep a decision journal. Write down why you're making a trade. Your journal won't lie, even when your memory tries to rewrite history. Third, pre-commitment. Make a solid plan before you're in the heat of the moment, and then stick to it. This is the simple thing that could have saved Mark Twain. And fourth, practice mindfulness. It helps create that tiny, critical pause between a feeling of panic and a panicked click.
Ultimately, it all comes down to this simple but incredibly powerful truth. The market is a relentless test of your psychological discipline. The battle isn't against other traders out there. The real battle is against the ancient, emotional wiring inside your own head.
So, I'll leave you with this to think about. The next time you feel that powerful urge to make a move with your money, just pause. For 1 second, pause and ask yourself, who's at the controls right now? Is this my thinking brain or my feeling brain? And what is your brain really telling you about your money?